Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking in on gold. The dollar we'll start with. So we had the bearish break of the potential head and shoulders pattern on the dollar. And unfortunately for the bulls, it occurred after a very steep drop to the downside. So the RSI was oversold pretty much right when that resistance broke. And by the time we were at the low of the day on that day, Monday, the RSI was just under 30. So you scroll back and you look at the daily time frame in the past year and a half. What happens when the RSI reaches these levels? Look at RSI hitting 30 back in October of 2015, huge bounce. RSI just under 30, big bounce. Just under 30, another couple times, 3 more times we bounce. So it's very clear that when the RSI gets right around 30, we can anticipate the odds of a bounce are more likely than not. So watching how this week played out, we had our bullish reversal hammer, and we confirmed it the next day. And then from there, we've only seen follow through to the upside. So we did still break support, and what that will lead me to believe is that we will see another lower high form here compared to our double top back up at 102.26. So 4 big days to the upside, a bullish MACD cross, the RSI coming off of oversold, but just keeping in mind that we have made that bearish break. Even though we did see a strong recovery after that bearish break, the bearish break was still made. So we are looking now for a lower high to form. The question is going to be, where is that resistance level going to show up? The high that we have seen so far is 165. I'm looking at the high of March 16th at 175, and then we'll be looking up here in the 101 area, previous support levels. But the bulls are tiring themselves out after a nice 4-day big bounce, so I would anticipate some consolidation, and we'll see if the bulls form a nice healthy higher low. Volume will be very dependent. We'll see how that candlestick shape on consolidation. So the bulls will be looking for a higher low and then continuation for a higher high, and the bears would love to see a increase in bear volume and a big move to the downside without establishing a clear higher low level, heading back down to our recent lows in the lower $99 and upper $98 range. So it is a big bullish reversal candlestick on the weekly time frame. We'll be watching to see if the bulls are going to be able to confirm that candlestick, and it is a big bullish engulfing candlestick. So very clearly the bulls have momentum on the daily time frame following this oversold bounce. Very successful oversold bounce at this point. The question is going to be, where is our top of this bounce going to be found? And I do believe it is going to be found shortly, at least in the short term, a top of resistance. So with that dollar strength, we have seen some gold weakness, not entirely inverse. If it were inverse, it would have pulled back more significantly, and we'd see 4 big red days here. So the consolidation started out very healthy with nice little lower wicks, very contained. The big red day on Thursday was a bit more concerning for the bulls, but now we are seeing the bulls show back up with a bullish candlestick here. And we have the key support still being defended. We did break this level of the low of last consolidation, but the bulls were able to recover 1240.87, so a higher low compared to that, or I should say a lower low compared to that level, but clearly the bulls did buy that dip with some conviction. We have a resistance level to be watching here, and it's a bit of a double top. We got up to 1263.74, and I wouldn't call it a double top, actually. I'd just call it a lower high, because we got up to 1260.95, almost $3 of a lower high. And as we head into next week, there is a weekly resistance level that I'm going to be watching on gold. Very key, and it has been rejecting the price on this entire pullback. Look at how many rejections we had back in the end of 2016, and here we are forming a bearish candlestick on the weekly time frame just under that resistance level. So this is an upper wick of profit taking. It's a bearish weekly candlestick, and it's a lower high on this bounce attempt. So what we have is a very strong oversold bounce, our low of the consolidation. Now our lower high is set, And if we were to see a red week this coming week, we would be looking for the bulls to form a higher low, and this would be an equilibrium pattern after the oversold bounce started playing out. So how we close next week, whether it's a red week or a green week, is going to be very important because of this upper wick showing profit taking to end this previous week. So where that leaves the miners have been struggling. And the bear miners have clearly been in control because the bull miners haven't been able to prove anything. If I were going to choose a bull miner, I would choose GDX because it's stronger, and I'll point out why. And if I were to choose a bear miner, I would choose JNUG, or I should say JDST, for the same reason. So NUGT here and GDX have formed higher lows and higher highs before we did start to break a little bit of these support levels. The low of this consolidation is 2251, and we bounced off of 2253. So the low of that initial consolidation is still holding. So we saw a little higher high, but we've just been bouncing around this channel. Look at the 50-day moving average resistance. That is very clearly a resistance level to be watching after we have rejected from that level 6 of the last attempts to get over it, and that's at 2341. So we know when we close over that 50-day moving average, the bulls will have some decent momentum heading in their favor to the upside. In terms of support, we have the daily middle Bollinger Band and the 100-day moving average support holding the low of that consolidation, and those levels are 2245 and 2238. So if I wanted to dumb it down and make it as simple as possible, I'd be watching the 50-day resistance. A close over it is a bull break, and I'd be watching the 100-day moving average support. A close below it is a bear break. We saw an upper wick of profit taking on Friday. Bulls could not hold on to those gains, and we've seen that consistently without the bulls able to see strong follow through. The weekly time frame is showing a bit of weakness, and there is potential that this is a bear flag. After a big dump for a month, we see a weak bounce attempt at this point. It's still fairly weak, and we have been unable to close over these exponential moving average resistances. The 4-period, or I should say the 8-period exponential moving average is 2291, and we've closed just below it all 3 weeks here on this bounce attempt. So as long as those exponential resistances stay resistance, the odds of this being a bear flag are more likely. The bulls need to get over these exponential resistances to decrease the odds of it being a bear flag. And we are looking back down towards those recent lows of 2114 and 2126 if it were to be a bear flag with continuation into this next week. So the bull miners are really struggling. Their backs against the wall. Here is GDXJ, where it's a much more clear lower high and lower low pattern. We broke the low of that initial consolidation early this week, and we have a big upper wick of profit taking here. The bulls are defending the 100-day moving average support. That level is 3557. We have bounced off of it 6 times, so very clearly the bulls are just holding on as long as that level holds, and we have a very clear lower high pattern to be watching now. 3857, 3822, 37.25, and just recently Friday, 36.76. So it's almost a descending triangle pattern with a horizontal base of support in the mid $35 range and a clear shrinking range of lower highs. We're going to see a break of that pattern in the near-term future. So if I were to draw that pattern, I would put a downtrend resistance line, making sure no daily candlesticks closed above that downtrend resistance, and I would be drawing a horizontal base of support, making sure no candlesticks close below that level. So this is the tightening ascending triangle pattern, or I should say descending triangle pattern, that I would be keeping an eye on, and it's getting tighter and tighter, and we should see a clear break of this pattern next week. The weekly time frame for GDXJ, if the bulls cannot get over the 50-week resistance, the bears very clearly remain in control. And this 50-week moving average keeps coming into play. A month of rejections, a month of support, now 2 weeks of rejections. Same scenario with the potential bear flag, exponential resistance rejecting the bounce 3 weeks in a row, and the bulls must prove themselves by breaking these daily tightening ranges, breaking these lower high patterns, and heading back towards the upside. So I need GDXJ over the 50-week moving average resistance. I need GDX over its 50-day moving average resistance for the bulls to prove their strength and momentum to me. And as of right now, we've been seeing gold holding up just fine and being very strong, and the bull miners not responding to it. So we need to be very cautious if making bull miner plays. The bear miners have been having momentum. Of course, there's day trades in both directions, but in terms of the longer term to midterm, I would say the multiple week outlook, it is not looking good for the bulls. They must show up. I appreciate you watching. Have a great rest of your weekend, and we'll see you soon.